We are going to jump into Medi's segment here, who's going to talk about Atom and Cosmos.
Thank you, Faris. Hi, everyone. How is everyone doing today? Before I jump into my presentation, I want everybody uh, to smash the like button. Our aim over here is to provide you quality content, and I'm surprised we haven't hit the 1 million mark. And I want you guys to help us get viral on YouTube, and help us with the YouTube algorithm. So you guys have to help me by smashing that like button. I know a lot of you guys are watching, and some of you guys are not smashing that like button. Anyways, before I jump in, I had few questions over here, so I'm gonna uh, try to answer those questions. There was one question by Digital Realm. He was asking what happened to Polkadot. You were bullish on Dot, now AVAX. I think it's a bit of a issue regarding market timing. We do remain constructive on the whole layer zero. In fact, the presentation today would be to explore layer zero. It's just the fact that at the moment, market believes that a protocol which have features of layer one and layer zero together could be a viable option. Also, I believe that we are a bit early when it comes to crypto. So at the moment, the whole market cap of the whole crypto industry is 3 trillion. Not even 3 trillion. I think 2.6, 2.5 trillion. And Apple, just one stock, the yeah, so one stock is 3 trillion. So we're still very early, and if you want to kind of have one of those fang stock that does astronomical exponential returns of, let's say, 10,000 percent return, you need to have a diversified portfolio of long term winners. Another question I had was by Ling. He asked us, still feeling RMRK. It held up pretty well, and I'm thinking to add, yeah, RMRK is one of those NFT slash metaverses play which I'm very constructive on. If I were you, I wouldn't add a lot of percentage to my portfolio, maybe 1 or 2%. The only reason being that the token does not have utility, so we are kind of buying growth. At Token Metrics, we like to be value investors where we see execution and then add to our position. So I hope that kind of helps, that kind of adds more value. uh, yeah, so today I'm going to be discussing layer zero. So I'm going to share my screen for you guys. Just bear with me for 1 second.
All right, while Medi pulls that up, just a reminder to everybody as to who Medi is and what he does. Medi has a background both in crypto, blockchain science, equities, and portfolio management. So Medi is going to help give you a key sector theme, and he's also going to show you how Web 3.0 can be built. Now, we're going to use Cosmos. We still like Polkadot, but I think this is something really important to pay attention to, because just like you needed to understand why the iPhone or why Netflix was going to be big, you need to understand what the future of the internet is. So, Medi, take it away.
Thank you, Bill. Yeah, just to add on to that, I'm also doing a master's part time in cryptocurrency, digital currency, and blockchain. So yeah, I think I have a good grasp in terms of what future trend could look like, and one of the trends I think the market could start pricing in. Maybe not now, maybe after 6 months, maybe after 1 year, is layer zero. I believe layer zero is a very nice hedge to layer ones and also Ethereum, and also kind of seeing like I also worked in global macro research. One of the things I realized during my stint as a macro analyst is that market works in cycles, and market works in themes. So in crypto, I have felt like there are two things to make a lot of money. One is to either get into a project really early, but then obviously you get into a project really early, you also have the risk that you get into a project which is horrible, and then you lose your money. Now, the other way you can make a lot of money is to basically clinch onto one of the themes and let that theme run. So we saw that with layer one this year. We saw that with NFT. Ian is bullish that in 2022, the theme could be DAO. There are a few other themes that I like. One of the themes you mentioned was security token, Polymash. Uh, and layer 0 is also one of those. So before I kind of start an introduction of layer 0, I want to set some context. uh, there is this trilemma in blockchain. uh, this term trilemma, blockchain trilemma, was actually coined by Vitalik, right? So Vitalik basically proposes that any blockchain we have, whether it's private, public, blockchain has to decide what two features it wants the most. So you have decentralization, you have scalability, and you have security. So over here, as you can see, there are different blockchain that have selected different features. So if you talk about Ethereum, Ethereum's wanted to be more secure and decentralized blockchain, but it kind of gave up. Ethereum 2.0 kind of solves this, but eventually, but at the moment it gave up on scalability, and that's why you kind of see high gas prices. But then you also had some other blockchain like let's say iota focus was on scalability and decentralization. It kind of gave up on security. So my thesis is, for the long run, I think there will be multiple blockchain, and each blockchain that we'll see in this world going forward will be specialized in terms of one particular theme. So for example, at the moment you have Binance Smart Chain. Now, Binance Smart Chain kind of focuses on decentralization. No, no, it doesn't focuses on decentralization. It focuses on security and scalability, and that's why you kind of see within Binance Smart Chain, a lot of gaming projects are built. Similarly, on Solana, you also see a lot of gaming projects popping up, right? Because both Binance and Solana kind of decided the trade off they want to go for is basically scalability. We want to have a blockchain that is scalable so the gaming transactions can happen, high graphic games can deploy. Now, Ethereum, on the other hand, we can't see Ethereum being a popular chain for gaming at the moment. The reason is because let's say if you're playing game and you kill somebody and you get some coin, you got like 2 or 3 coins. If you want to sell those 2 or 3 coins, you have to pay 100x or 50x more gas fee, so it doesn't make sense, right? So so you have to decide what chain you want to specialize in, right? So Ethereum, I think, is one of the best chains when it comes to uh, DeFi, because of the high security feature and decentralization feature. You can be assured that what the transaction which are of billions of dollars, millions of dollars, are kind of secure. While I cannot have that security with Binance, because assume, let's say Binance secures a $1 trillion, just hypothetical number, $1 trillion worth of DeFi projects, DeFi TVL. Uh, there will be incentives among the 20 validator sets that, okay, you know what, we should corrupt the Binance smart chain and basically try to steal that 1 trillion mark. And it will make sense because Binance smart chain TVL, the valuation is about 100 billion, but the TVL is 1 trillion. So that's why for different blockchains, you need different purposes. Now, another theory I have is that this can work, this might not work, but I think, let's say if you kind of imagine that we are sitting in 2030, just imagine we are sitting in 2030. I feel like there will be millions, if not if not thousands of different blockchains, and each blockchain will be specialized for one purpose. And I also believe this thing called scalability is also kind of an illusion. If you think about it, if a blockchain becomes very popular and the market cap of that blockchain increases significantly, the gas price will increase. So in my opinion, the scalability dilemma is also kind of mythical. I think blockchain can scale. Maybe it goes to 5,000, 10,000, but there has to be an upper limit. And I believe in a world where billions of transactions take place, I personally don't believe that one, two, three, four, five, maybe 10. I think 10 blockchain won't be enough. We need thousands, if not millions, of different blockchain. And guys, this is where layer zero comes in. So think of layer zero. I'm going to describe this diagram in a bit, but just think of layer zero as Ethereum. Like for example, you have Ethereum, and on Ethereum you have different applications building up. Just think of layer zero as a blockchain where different other blockchains are being built up. So think of Ethereum, but instead of on Ethereum, you have let's say SushiSwap or Uniswap. You have different big blockchains built on top of Ethereum. So that's how I would describe layer zero. Uh, so the way kind of Cosmos, this is a separate definition. Polkadot will have a separate definition, but in terms of Cosmos, what Cosmos does is through Tendermint BTF, it kind of gives everyone the ability to create their own consensus mechanism, and then it gives you a software developer pack where all these software developers or anybody who wants to deploy their blockchain can decide that my blockchain can have staking, it can have a on-chain or off-chain governance, it can have ability to communicate with other blockchain, it can have slashing. So as a developer, I can decide which features I want in my blockchain. Now, I told you earlier, there is this dilemma, and every application will require different set of things. So gaming might require more scalability, DeFi will require more security. So every blockchain is unique. So let's say what Cosmos was able to do is give you this template, a modular template where everybody can come in and make their own blockchain. So Binance Smart Chain, for example, uh, it was built through Cosmos SDK, and they decided, okay, you know what, we just need 20 validator set. On the other hand, Terra Luna was also built on Cosmos SDK, and they said, you know what, we need 100 validator set. And because of this customizability in terms of making blockchain from scratch, you have brilliant projects launching on Cosmos ecosystem. So you have Terra Luna, you have Binance, you have crypto.com chain, you also had Thor chain, and you also have native projects like, let's say, Osmosis, Akash, and so on and so forth. So Cosmos did, I think, after Bitcoin and Ethereum, did the best service to the whole crypto industry by allowing us this modularity approach towards building do-yourself blockchain. So this is pretty cool. Um, so once you have the blockchain ready, you have Cosmos Hub in the middle, and I mentioned earlier you have these different blockchains with different features. So let's say Osmosis, Thorchain, Terra, all of these blockchain are customized for specific feature. Like, okay, in case of Terra, I want more security. In terms of Osmosis, I also want more security. Thorchain, I want more security. With regards to Akash, I want more scalability since they're trying to disrupt cloud computing. So every blockchain will have specific feature, and some of the modules will be used. But one key theme this blockchain have between each other, and this is, I think, the essence of Web 3.0, and I think the next era of blockchain, and that's the reason why layer zeros are called Internet of Blockchain, is that one of the module is called inter blockchain communication. I'm going to repeat, IBC. So if you install this module and turn it on, all of these chains were firstly in silos. Now they can communicate with each other. So this dotted pink line shows you the layer through which these blockchains can communicate with each other. And this is, by the way, guys, because of Cosmos SDK module called IBC. So Cosmos Hub over here can allow these blockchains to communicate between each other, and Cosmos Hub. So you can think of all of these blockchains as city, and Cosmos Hub is the port city, you can imagine. So these are ships. These ships come over here, and Cosmos kind of texts them because it's in the middle. So that's how the architecture of Cosmos work. Now there is one caveat, and I think one of the issues is some of the developers do not care about blockchain. Let's say if I'm a businessman, I don't have the resources to maintain my own blockchain, or I do not want to um, get the headache of making my own blockchain. So I think uh, that's one of the reason why I believe market sometimes underprices Cosmos and Polkadot, because sometimes market are hindsighted. So I think market at the moment is kind of hindsighted because they think it's a bit of an overkill. Developers wants to focus on business logic. So one of the best things AVAX and Ethereum does is that nobody has to create their own blockchain. Blockchain is there. You just deploy your application. So that's one of the reason I think at the moment Ethereum and AVAX and maybe Luna Terra, they're doing so well is because of this issue. But in the future, Cosmos is introducing this thing called shared staking, which in my opinion, will be a game changer for Cosmos. So what shared staking will do is give you more. Yeah, somebody said I forgot to mention about the Tendermint. Yeah, so Tendermint is the consensus mechanism. So delegated proof of stake for Cosmos. So all of this blockchain will basically have the consensus mechanism because of Tendermint. So right, guys. So with share staking application, like let's say for example Thorchain, they do not care about having their own blockchain. They can just deploy the app, and Cosmos Hub will have its own validator set that will help Thorchain basically secure the blockchain. Uh, so yeah, this is how the Cosmos work. Another issue previously we had with Cosmos, I apologize in advance if you can't see this graph. Let me kind of zoom in for you guys. One of the reasons why market didn't like Cosmos was because there wasn't value accrual to the token, and because of inflation the value accrual was actually getting diluted. Because Cosmos has been one of the OGs of crypto, they just wanted to build, and they didn't work on the tokenomics that much. But I think it's changing now, and I think market will start to realize this, and this can moon. Not financial advice. So the reason why it can moon is the token utility of Atom has started to pop up. So you have Cosmos Hub. So let's say if one chain transfers to another chain like token, message, what have you, Cosmos Hub will take value through transaction fees. Great. Then you have the shared security, which I mentioned. This is very similar to Polkadot. So those two projects that, let's say, do not have the enough resources to secure the chain, they can ask Cosmos Hub to kind of help them with security, and they'll either airdrop their tokens or they'll give them fees. So that's another way Atom token holders will be able to accrue value. And final thing is, within this Cosmos Hub, you'll have Gravity DEX, which the Gravity DEX will have Atom in their forefront, and some of the transaction fees will accrue to Atom stakeholders. So this is like part A. In part B, I'm going to give you my investment thesis, some of the concerns, some of the valuation analysis, but I think that I'll do that for next week. I also have Mr. Peng coming up tomorrow for podcast. So guys, if you have any questions, just post it down below, or subscribe to Token Metrics and just hit me up on Telegram. And any of those channel works, but I would appreciate if you kind of subscribe to Token Metrics. That's how we earn our salary. So yeah, guys, thank you, and do let me know. I'll have Mr. Peng, who is the CEO of Tendermint and one of the core contributors to Cosmos, if you want to learn anything new.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.